Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 29th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go explore. We're going to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044 is the number you would call. So let's go ahead and get this show started on magical, magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 120 points at 18,514. S&P's up 13 points. NASDAQ Composite up 24. Russell 2000 up 8 points. The DAX closed off 43 points. FTSE was closed last night. Gold is flat, trading out at $13.26. Silver's up 8 pennies, trading out at $18.74. Light sweet crude back 76 pennies. She's trading out at $46.88. Lead the charge here dollar-wise to the upside. Priceline is up about $11. Credit Acceptance Corp up 6. Chipotle up about $6. Acacia Communication up 5. Google's up about 5. To the downside, you've got Core Mark Holdings down $6, about 13%. Tesla's off $3. NetEase down a couple of bucks. That's a little over 1% to the downside. The jazzy one, Jazz Pharmaceuticals off 1%, down $1.28. So what are the markets doing? They're doing exactly what they communicated they would do on Friday. They're going back after their highs. You say, we talked about this. You and I talked about this. We said the tell in the market on Friday was the IWM. Now, at the stage that we were taking a look at the IWM, it still had not even made it back to the low of the trading session of August 25th. But what we knew is that prior to that, we knew that what the IWM Russell 2000 was doing was pushing into its most recent high. That was August 23rd. There was 21.5 million shares, and it was pushing in with volume. On Friday, you've got 26 million shares to the outside. In the case of the Russell 2000, it had a swing point down here from August the 17th. That top is 122.50. Did we actually get down there and test it? We got down to 122.30. Tested that, rejected that, went back after its highs. Now, the question is going to be, today, by the way, volume-wise, only 7.5 million shares. So seems like we've got light volume. Of course, we're in about, you'd have to say, about the last week of summer as far as vacations are for a majority of people. So this week is going to be light. You've got a holiday on Monday, so we know it's going to be light volume trading. Nonetheless, let's just say volume or not, if the IWM closes above 123.61, price ought to go test and hit the 124.46 level. And that's what's going on inside the IWM. If we go take a look at the QQQ series ETF, the Q is also on Friday basically pulling back into a level where they broke out. This was on August 5th. We know that because that gap to the upside. Volume on that breakout, nothing special, 23 million shares, but the Qs haven't done anything special in the way of volume for a long time. On Friday, pushing down and up 23 million shares to the upside. So you're pushing down with similar volume, not enough to bust to the downside. To the upside, though, the volume was only 11 million shares. So the Qs are doing what they also communicated to you and I very clearly on Friday. They were pushing into highs with volume. Now, the key level to be watching inside the Qs today, 117.56. You're trading at 117.29. If you close inside 117.50, what did I say, 56? 117.51, actually. That's the number, 117.51. Says you go test the high, 117.79. That's what's going inside of it. If we go take a look at the Dow Diamonds out here, the Dow Diamonds moving back on Friday with what? Light volume. I think. Hold on. Come on. What the heck? 6,400. I've lost my volume. That's why I was pausing here. That's really strange. I don't know if I can hit this before we'll update it. I'll be a son of a gun. Well, I can't give you the volume on the diamonds. That is really quite weird out here. However, my recollection is that they were pushing into the swing point from August the 2nd, which had 5 million shares, that they were doing it with light volume on Friday. I think it was 3 million shares or so. Maybe somebody inside the Tigers Den might have the volume aspect. I don't know. I had it, but it's not there right now. So you've got the diamonds also suggesting that they were not going to go ahead and bust out the lows out here. Let's take a look at the SPY. Let's go see if I've got volume on the SPYs out here. The SPY really doing the same thing, right? Same setup. The swing point out here, trading session of August the 4th, 46 million shares. On Friday, we saw a volume of 122. So it was pushing into it, couldn't bust it down. That was that little breakout area. It's really 71 million shares because of that breakout on August the 5th, but also testing the high, which only had 53 million shares. So what are the SPYs going to do? They're going to go make another run for the highs out here, and that's a trading session from August 23rd. In all likelihood, we're at the end of the month. We're coming into a holiday out here. The markets are going to just simply continue. They had the opportunity. The Bears had the opportunity to take control. Let's face it. They just absolutely fumbled the ball. Hey, it is NFL season out here, right? You know, and these were second stringers that were in there playing on a Friday because they had every opportunity to go ahead and push the markets to the downside, and they just simply failed to do so. Now, look, the first stringers, let's go see where they are sitting. I believe they are on the bench for some reason, but let's go see if they're in the bench or in the shower room. Now, we're gonna make that call based on what is the advanced decline oscillator doing, and inside the NASDAQ composite right now, not a good scene for bears out here. Right now, you've got that NASDAQ composite oscillator in the positive territory. Its reading is 4.65. Anything above zero says that it is the buyers that are back in control. That's not the characteristic of a market that's ready to move to the downside by any stretch of the imagination. Now, the New York Stock Exchange, it needs let me see here. I can give you the number. Just have to look over to my other screen. I think I've got that. Yeah, about 2,102 or so net advancing issues. That's a huge market breadth day. So I don't anticipate that it's going to be the New York Stock Exchange that's going to really be able to get above the zero line today. Although if we go take a look at net advancing issues right now, you're at 1524. So you've got leaders outpacing winners. When I say leaders, advancing issues outpacing declining issues by 3-1, a little over 3-1, 2,215 versus 689 out there. Is it possible to get to that oscillator above zero? It is, but it's going to need like a 90% day, and I don't anticipate that occurring. Of course, you and I know that we can also go take a look at that VIX index. We can go see where she's trading. I believe it's below that infamous, now famous, 50-day exponential moving average. That says lots and lots. Did I say lots? Lots of liquidity to push these markets higher. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go to our first request of the day. This one is for James, or JT, as his good friends like to call him. JT is looking for looking for an entry on platinum on the futures, and we'll use PPLT as the vehicle. So let's go take a look at the current platinum futures contract out here. And we're just really looking at a plain chart out here. I'm going to turn the volume characteristic off at the moment. So we're really just looking at the candle signals. And we can see that what platinum here has done, we can see that it made a top out here. The trading session was on August the 10th. Now, here, let me show you what it was actually doing at that time, JT. So as it was moving higher, it was doing so with less relative strength out there. And that's what that little black diagonal line on my screen shows. We had a nice little bearish reversal signal that showed up on the very next trading session. That date, by the way, is, well, if I get my crosshair, I can tell you, was August the 11th. So August the 11th has a nice little topping pattern that's in there. We can see that it's continued to move lower, formed a little doji candle on Friday. Now, doji candles as the market is moving lower really don't have a whole heck of a lot of meaning. They don't have a whole heck of a lot of meaning to me. It says that the market is getting tired when it shows up, no matter where it is. I mean, that's really the Japanese candlestick interpretation of what a doji candle is. At resistance, a whole different scenario out here, but still not one to take any kind of action upon. Now, when you have a little doji candle, such as Friday's, it doesn't take much of any price movement in order to get a bullish reversal signal, because basically you open and close at the same spot, and all you have to do is go ahead and open and close about 10 cents higher. On a $1,000 vehicle out here in order to be able to get a bearish reversal candle. But this bearish reversal candle here, JT, is also occurring where others have occurred at the same price level. The most recent one was on July 25th, when it was really on July 26th that created that Three River Morning Star. So price has come down to a ledge here where you would expect it to find some support. But is it the kind of support that you want to buy out here? I don't know. First of all, let's go ahead and, because this is really a reward to risk scenario, on any bounce here that we would see inside platinum, the area where you would expect the snipers to be hanging out is a price point of 11.18. you're at 1081 right now. So you have to make that interpretation. Now, I can see it bouncing up to 1118. No problem with that. You would have to make that interpretation as to whether or not that's the proper reward to risk trade for you. There's also the potential of an A to B equals CD to the downside. Let's take a look at it. The A point out here being that swing point high on August 10th, your B point being the low on August 17th, and it was really only a one-day retracement. Nonetheless, that gives us a price objective 1-to-1 to the downside of 1045.30. Here's the key, JT. If price moves below, let's put a horizontal line across here, 1069. So you can see this was also a bullish reversal signal right here on July 21st. So I'm going with the more conservative price point objective. Any move below 1069, 1045 is on your way next. Then maybe 1019. I would say 1019 and 987 out here. So you didn't give me an indication of the time frame of the trade that is out here. Could this bounce to the figure that I gave you of, 1118? Absolutely. So if you're an intraday trader, I can see going ahead and taking that trade out here. Otherwise, I would just simply be patient with regard to your entry into platinum as we speak. Now, if we take a look at the metal that is giving us the best signal thus far, it is silver. Now, in the case of silver, a slightly different tune out here because this did complete an A to B equals CD to the downside. At least it completed the small one, did a 1 to 1.618, created that bullish engulfing candle, but much like we took a look at, just as we did on platinum, you had a little doji candle on August the 25th. That was on Thursday. Friday didn't take much in order for that to turn into a bullish engulfing, but you are getting a little bit of some follow through today. So that bodes well with regard to silver. Where is silver going to bounce to? I know that somebody out there asked that question. And so I'm going to go ahead and see if we can define that for you. $19.31 out here. So you're at $18.75. I would be looking for $19.31 to hold as a resistance out here. So you'd have to make the reward to risk, but it does look like that is going to happen. Hey, what happens if price gets above $19.31 out here? Well, then what we look at, since that was an A to B equals CD pattern, we just look at retracement levels. And that says, hey, how about 1931 also happens to be the 0.382 retracement. I did not know that. I did not know that. But now I've got two figures that come out to $19.31. So what kind of conviction do I have that silver's going to move to 1931? Lots more conviction that that's where it's headed to. Now, if it gets above 1931, you should anticipate 1989 would be the number out there. So you've got platinum giving you a nice little signal of where bullish support, no candle, no pattern out here that has completed with regard to platinum. But silver, which has been high-ho silver, by the way, which has been the weak link out here, is actually saying, hey, I have bottomed out there. With regard to Goldilocks out here, just kind of hanging tight. Gold really not giving us much of any real signals other than really just getting back to its swing points out here from July 21st. So a little bit like platinum. So this is certainly a support level. Now, we didn't put any of our TAS market profiles on. That is blasphemy out here. So I'm going to go ahead and turn those on right now. In the case of gold, where is it going to bounce to? I'm glad you asked me that question. Looks to me like $1,347 would be logical. It's got to get above 1331 in order to do that. Of course, you didn't have to be a math genius to figure that out, but it's that 1331 that happens to be a little bit of a resistance zone. And I ought to go ahead and give you the market profiles on silver out here. That would also be foolish not to do that. So come on, populate out here. Oh, how about that? Even better yet, with regard to silver finding a bottom, how about that? So you have several patterns that actually were coming together with regard to silver. We've got the A to B equals CD to the downside. Bullish reversal signal on Friday. Today you're having some follow through. The bottom of a weekly profile out here. The bottom of a daily profile that formed on Friday. This says 1919, by the way, should be the area of resistance out here. I'm going to go with 1931, but be watching silver as it gets to that 1919 level. So JT, I hope that answered your question out there, and it just depends on your horizon and your time frame for trading. Hey, if there's any other questions, by the way, this is kind of a quietish type market. Even though the Dow's up 122 points out here, we're really trading with inside the range we've been trading in for so long. And I know you're probably sick and tired of hearing commentators, even like myself, say that. But I just wanted to suggest that, hey, send me all your cards and letters, but preferably what it is you're looking to trade, what you'd like some additional eyes on, whatever time frame, what you're looking at. That would be a beautiful thing to keep me going for the next 34 minutes out here. But if not, during the next break that comes up, I'm going to go ahead and I'm going to wind myself back up. Not that I don't have enough energy, but that'll go ahead and get me in high gear out here. So right now, Dow's up 121. We probably ought to take a look at some of the sectors inside of the S&P 500. How about that financial sector? Strong like a bull out here. Of course, today, volume-wise, do we have another confirmed A to B up equals CD, the upside? Let's see, what is that volume out here? The swing point was 23.93, had volume of 33 million shares. You're at 17 million so far today. But, hey, don't worry. The weekly already has a confirmed A to B equals CD to the upside. XLF heading higher. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. A couple of questions that came in during that break. I did go ahead and wind myself up, so don't worry. We're going to be able to make it through 2 p.m. today. One of the questions that came in is where do I anticipate that the futures contracts, the equity futures contracts, are going to move to? And if you're watching us on Tiger TV, I've got the daily futures contracts up on my screen. Upper left is the ES-Mini, S&P. You've got the NQ in the upper right. You've got the down in the lower left. You've got the Dow and the Russell 2000 in the lower. But I do see we've got a caller on the line. So that being said, we will come back to this because callers have priority here at TFNN. So on the line is Alex from Newton, Mass. Alex, thanks for calling. Thanks for holding. How are you doing today?
Hi, Steve. It's nice to talk to you for the first time. You
nice to speak to you.
Me by the AG in the room.
Yes. Well, AG, Alex, thanks so much for calling. How's your summer going?
Excellent. It's a little bit hot, but can handle that. No complaints.
Well, I think here in the state of Florida, we're supposed to get some rain. Should we send some up your way, or you don't need it?
Yeah, please.
Okay,
please,
we'll send some rain up to Alex in Massachusetts.
Not more than 10%, please.
Okay, no problem. Now, you're calling about PPLT. We were talking about platinum earlier.
And if I can ask you to put the same screen you had before, I believe that's what from Ninja Trader?
Sure. Okay. With regard to, you want the platinum contract or PPLT? What would you like?
PPLT.
Sure. So if we pull up PPLT, here's this screen, and really doing the same thing, folks, that you and I were looking at. It was moving higher, doing less relative energy out here. Now we're taking a look at the ETF right now, forming a nice little doji candle at its highs on August 11th, gap down on the very next trading session. And so, okay, take it from here, Alex.
So my question is mostly likely this rising window, bear sash, so on and so forth. It's from Tim Nissen, right?
Yes.
So if we go from, for example, if we see bear sash number 3, do you see 3 in to the left?
To the left.
Left.
Yeah.
Yes. Slightly left.
Okay, I got you right here. I got you right here. Yeah.
So it's not a bear sash.
Well, it can be, but still, when you're looking at the candle session from July 23rd, how are you using that for a target? You think you're long the PPLT?
I don't know. I will cover my long here.
That's you're going to cover your long.
That's for sure, but it's not a bear sash. So the question is, I was trying to buy a package which will allow me to show, like you see, like candle patterns here, right?
Okay. Yeah.
And I noticed that Steve Nissen not very accurate. And unfortunately, they do not provide anything to adjust that. So how you can actually use this?
Well, I guess you and I have two different interpretations. I find, because I've taken a look at many different candlestick signals out there on different platforms, and I find his system to be the most accurate. There are times when it doesn't provide you with certain signals because the software wasn't really designed. For example, it struggles with evening and morning star patterns, Alex, that extend beyond a 3-day reversal, because the typical pattern is one that takes 3 days for that pattern to form. But the reality is those candle sessions can go on for 4, 5, 6 sessions and actually form tops or bottoms out here. So my experience has been that it is the most accurate for being able to help you identify the different candlestick signals that are out there, both bullish and bearish. Now, when I show these charts on my screen here, I am not showing you all of the candle signals that are available through the system. The reason is because many of those candlesticks are just provide more noise than anything else with regard to reversal signals that one might want to use to go ahead and identify a top or a bottom. That doesn't mean that you can't use them. That doesn't mean you can't use them as reversal signals. My experience has been that the ones that I show on my screens are the ones that work out best. Now, in the case of the PPLT, as an example, I would always trade this based on what's going on inside the platinum contract.
Of course.
Because so the gaps. So for me, PPLT, the candlestick signals that show up here, to a certain extent, aren't going to be the ones that you want to rely on. Instead, you would like to actually go to the current contract. Now, I don't have that in my my little screen right here. I just happen to have the continuous contract up, and that's what I'll put up on my screen. But you would certainly want to, as you know, you'd certainly want to go ahead and use the actual contract that is trading. But from here, this is where we really want to be able to utilize the candlestick signals to go ahead and assist us with a trade in, for example, that ETF of PPLT. And here we can clearly see, now you realize a bull sash and a bear sash, there's no, there's not a directional candle, meaning that you don't have to be in a trend for either of these candlesticks to form out here. So you have to be careful with regard to how you would use either a bull or bear sash candle. But with regard to a three-river Morningstar, as an example, which showed up here between the days of the July 22nd, the 25th, and 26th out here, that's what helps us to identify really key levels of support. And we can see that price moved down on the platinum contract into that level. Again, as I say, formed a little doji candle, and today you've gotten some follow-through to suggest that here is where the buyers are trying to support platinum. Now, I take a look at the price oscillator for any instrument, Alex, and when that price oscillator turns down, that's when either the market is correcting or is just doing a retracement. And right now, that price oscillator, the difference between two exponential moving averages, the 19 and the 39, is above zero. So at this stage of the game, all that platinum is doing is really making a retracement of sorts, maybe an A to B equals CD pattern out here. But I can absolutely see with silver having formed at least a short-term bottom, and that it looks to me like what platinum would like to do is bounce to that oscillator unchanged line, 1118. If price gets above that, then that gives us a different scenario out here. But that should be a significant level of resistance for it. So as far as candlesticks, the problem with the Nissen candle scanner, Alex, is that not so much that maybe it sometimes gives you a false signal, but the problem is you can't integrate it into other trading strategies. Because what it paints up on the screen, it paints the actual name of the candle, but it doesn't generate an output code. If that makes sense, that you could go ahead and tie that into some other type of pattern out there. So that's my experience with it.
Okay, and do you have your top 10 patterns?
Top 10 patterns?
Yeah.
I would say with regard to patterns, the top patterns that I would be paying attention to that work most successful for me are either that lightning bolt pattern, A to B equals CD, or price relative strength divergent patterns. And then the third would be a seventh wave move. To me, those are the three most consistent patterns for identifying reversals in the marketplace, all confirmed with some type of bullish or bearish reversal candle.
Okay, thank you.
All right.
You, Steve.
Hey, you bet. Hey, Alex, thanks so much for calling AG, and we'll see you inside the Tiger's Den. This is Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Back to platinum here, just real quickly, so I can give this data out to you guys, both Alex and JT. If we take a look at the weekly profiles out here, our TAS profiles, those are the green horizontal lines and the blue horizontal lines going across my screen. I'm going to get rid of that yellow line out here. You know, these are the levels that you want to be paying. So we also know that price came down to a potential level of support. That's the bottom of the weekly profile. We know that this has a bullish bias to it. We know that because that point of control is closer to the bottom of that box out here. So 1054.10 is a real key level. If you were to see price close below that for any reason, you would definitely want to exit any type of long trade inside of platinum. But otherwise, price is trading at that traffic highway where there's the most congestion, where both bulls and bears find value, and that's at this 1080-ish type area. The exact number to give to you is 1078.30. So this also suggests that price ought to move up to about the 1124-ish range, 1126.80 to be exact. That's the top of the weekly profile out there. We also had a question. This one came in from Bob, I believe. So give me a moment. There was something else I was doing before we went to UNH. I'll have to go back and see who had called about, or not who called, but who sent an email. It must have been something. But let's go take a look at UNH is the ticker symbol. That is United Health. And let's go see what this is doing now. In this case, our listener was looking to short UNH. Where do we think support would be if it breaks $100, the 100 simple moving average? So let's go ahead and put up the 100 simple moving average for this listener out here. And thanks for listening. Let's see if we can do that. Yeah, we can. Of course, we can do it. I just have to go add that tool. So give me a second to do that. That way we can see what is being looked at. So where is it? Moving average. Okay, now we just have to change this thing to a simple. So it's going to be a blue line going across my screen. Here is the 100 simple day moving average. So this is what the viewer is looking at. That blue line is looking to say, hey, you know what? When the 100-day simple moving average was crossed back on February 17th, that marked an initiation point inside of United Healthcare for move higher. Now prices come down to that level. Should be support. If it's not support and it breaks through that, then the logical question, which was asked, is, hey, where do I think price is going to go to? to. Well, here's what we can eliminate at this stage. We can eliminate the TAS market profiles because you can see that right now price is below all of those market profiles. In fact, in the case of United Health, you can't see it here on my screen, but I'm going to show you what it was doing. It was moving higher, doing less relative energy. So back to AG's question, some of my favorite patterns. She said top 10. We don't even need to have top 10 patterns out here. All we really need are just a few patterns that work all the time, give us excellent signals, and then just become a master of those. So as an example, one of those patterns was price either moving higher or lower, doing it with less relative energy out here. In this case, we can see that United Health was moving higher on July 20th, doing a less relative energy out there. And then we had a nice little doji candle that formed out here on July 22nd. Doji candles up at resistance levels. This is what I suggest is a resistance level. Price was already moving higher, doing less relative energy out there. That tells you things are about to slow down. Here is another bear sash candle out here. So that's saying you've got some resistance. It says you've got the bears that are at work out here. You got another at the high end, which we also see is price then starting to form below Stevie's. It's not mine, but it is mine because we take a look at it, you and I, on our screens out here, trading below the oscillator and change line. There's your price oscillator below. When price is also moving higher, take a look at this out here. You can see that price oscillator was beginning to drop and fall. Price was also moving higher. There's another diverging pattern out here. That's not what you want to see if you're long an equity. Of course, you wait for the signal to go ahead and take the short. But what I will say is that with regard to UNG, it was giving you some nice topping signals that are out here. Now, with regard to whether or not it is the 100-day simple moving average that's going to act as support, that I don't know out here. But here's what we do know, because the question was, where will price find support? Well, we can turn off our market profiles. I'm going to turn off the moving average out here. And what you and I are going to go take a look at is what? We're going to go take a look at the last sign of strength inside of this equity. And where is there a gap? Because gaps are our friends out here. So the gap area where price will likely find support is between 128.03 and 129.12 on a continued move lower. Now, the other thing that you have going for you is the last time that United Health, UNH, was down in this area was on June 24th. And there was volume of 4.4 million shares. Now, as prices come in there, it has done it with light volume, 3.8 million on Thursday. On Friday, 3 million shares, even though it was moving lower with 2.5 million shares on August 24th. So instead of it just breaking that 100-day simple moving average out here, you really need to see it get below the swing point, which is at 135.15. But the question will be, once that occurs, is there really good enough reward to risk for you to take that trade when price could move down to about 129 out here? So that is for United Health. Hey, let's go to Sam in Philly. Sam, thanks for calling. Thanks for holding. How are you doing today?
How you doing, Steve? Good. It's a beautiful day here.
Hey, Sam, we're going to a break for some reason. Can you do me a favor and hold on?
Sure, absolutely.
Okay, we'll be back to Sam in Philly as soon as we get back from this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back. Let's go back out to Sam in Philly. Sam, thanks for calling in and holding during this break. I appreciate it very much. I know you want to take a look at Johnson & Johnson. Ticker symbol is J&J. So tell me what you're doing and how I can help you.
I'm thinking it's like it's forming the base already around 118.5, and it's going to, go up now.
Well, if we
getting in here.
Are you long or you're looking to get in or?
I'm looking like short term.
Short term,
a few dollars and get out.
Okay. So I will say that short term, from a long standpoint, this is what you would really like to see. Because right now, today, with regard to Johnson & Johnson, it is trading below. It's trading with inside its market profile. It's daily market profile. And this is a cool tool. A very helpful tool, Sam, because what this should have, Johnson & Johnson should have some pretty significant resistance as it gets to the 120.17 level or 120.54. And you're at 119.78. So you want a few bucks. I don't see the few bucks just yet. Now, Sam, on the other hand, if price can close above 120.54, you'll then be above a couple of resistance zones that ought to act as support. And then you can easily make the case that Johnson & Johnson ought to go ahead and move up to about the 123 area. So so if it can clear 121, then you could get your couple of bucks of heading up into that 123 area. But right now, if we just simply utilize these market profiles as a tool, it would say not just yet. There's too much risk. Another price point that you want to watch, because I know you're looking at this from a long perspective, another price that you want to watch is $120.74, because if price can get above that, then its price oscillator, the difference between two exponential moving averages, will have turned up. And then that will be some wind at your back as well, and you can use that as a level of support. But, as we speak right now, I just don't see – you have to make that determination, whether the reward to risk is there. But I just see some overhead resistance inside of this equity as we speak right now.
So just wait until it goes above the resistance at 121 something and then see there. Yeah. Okay.
And the other side would be if you're really that hard pressed to want to trade this, wait for it to pull back to 118.64 and do that with less than 5.5 million shares. But I just see too much resistance inside Johnson & Johnson at the moment.
Okay. Perfect.
All righty. Hey,
Thank you.
Sam, thanks so much for calling. I appreciate it very much. That
Sure.
was Sam in Philly. So we'll check here real quick, check the email stream, see if there's, and I know I missed something else, but I deleted it. And so I apologize to the caller if I didn't get to you. Certainly was not my intention. Oh, I see somebody wants GDXJ, and that is for Chris. So Chris says, yes, I did have a fun weekend. Thanks for asking. And ate at a very, very cool restaurant in South Beach. But that's for another day. GDXJ is the ticker symbol. I'm stalking for a long. Okay. So this happens to be the Junior Gold Miners ETF out here. So here's what you have going for you in stalking for a long position. Price came right down to a level of support. So, silver looks like it's formed at least a short-term bottom. Gold may have as well. And therefore, platinum was giving us a bit of a bullish reversal signal for at least a bounce. So inside the miners here, we can see that price on Wednesday, Thursday, Friday, and today, so for the last 4 days, has been just simply hanging out around both the weekly TAS profile low of 44.37, the daily of 44.29. So there's your level of support. So stalking from the long side, whenever you take that to trade, make sure you don't let this close below 43.47. That would be the low of August 25th. And if it does it with volume of more than 24 million shares, then that would be especially a reason why. Where is this going to bounce to? You would be looking at the biggest problem that you have here is that there were a lot of sellers when this equity gap down just a few days ago, August 24, 30 million shares. For example, today it's up on fumes, 4.8 million shares out here. So just be careful on this trade because at the gap to the downside, which is at 47.79, that might be all you get. 48.89 would also be another price target. So, Chris, thanks so much for writing. Let's go to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you?
Good, Steve. I was just saying coffee prices, commodity-wise, been moving up, and I'm looking at Starbucks. It's down 54 cents. What do you think?
Yeah, so you got Starbucks right now pulling. This is gapped up, Ron, on August 24th, as you probably know, with 13 million shares. So that was a little bit of a sign of strength out there. The bottom or the top of that swing point is 56.54. So I would say if this can pull back to 56.54 or 56. Did I say 54? I did. 56.54 to 56.26 would be the more ideal spot to try to go ahead and take a long position in Starbucks.
Well, I'm looking at puts. I'm looking at puts because rising coffee prices is going to drive up their cost.
Perfect. Okay. Then ideally for you, you'd like to go ahead and sell this if this can bounce a bit. Let's say the market bounces here for a few days. You'd like to sell this at about the 57.98 level. And what you're also going to benchmark is the trading session from August 24th. And that high, Ron, is 57.98. That is a shooting star, the opposite of a hammer candle. And the way that shooting stars typically work is they either work or they don't. So if you see a close above that high, that says, okay, something else is going on inside of Starbucks. But that's where your bearish reversal signal is. That's the trading session from August 24th. And if you get a bounce up into that, that might be your better short position. I will tell you that this has some really good support at 54.92.
Okay, thank you. Appreciate it.
Okay. You bet. That was Ron in Denver, and somehow my clock on my computer or something is all messed up, so my apologies earlier to one of our callers. I now hear the music, so I know we're headed into the end of the show, but I'll be back tomorrow, and it's has always been great to be with you on Magical, Magnificent, and Marvelous Monday, but I'll be back on Terrific Tuesday. So have a great weekend. Have a great weekend. How about have a great afternoon? See you later, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.